Hey everyone, Tim Nash here for another video. Elon Musk has been tweeting about ESG. You can see I'll kind of leave this tweet up that he said that Exxon is rated top 10 best in the world for environmental social governance ESG by S&P 500, while Tesla didn't make the list. ESG is a scam. It has been weaponized by phony social justice warriors. So he's tweeted this. There have been a bunch of other tweets. This is a big thing. Basically, Tesla got dropped from one of the main ESG indexes, and that kind of pissed off Elon Musk. So now him and a bunch of his followers are all kind of attacking ESG. So I figured this was a really nice teachable moment for everyone, that I would take a few minutes and explain to you why Tesla has such a bad ESG score. So let's dive into it. Before I talk about Tesla specifically, I really do want to talk a little bit, broadly speaking, about just ESG in general, that really what ESG is and then what it isn't. So ESG stands for environmental, social, and governance. That really when it comes to these ESG ratings, we are trying to identify these risks for a corporation. So this really is about risk perspective. And then from there, they do measure things like the policy and the company's disclosures and their performance. Like, you know, if the company has said net zero by a certain date, and then are they on track to meet that goal? I want to be clear that, you know, it doesn't so much look at the product that the company sells. So, you know, this is a bit of a bone of contention, I think, for Elon and Tesla, that even though they sell electric cars, that's really not what this is trying to measure. This is really trying to look at their policies, at their disclosures, and their performance on these ESG issues. And the last thing is that, you know, it really is useful to compare versus your competition. So Tesla would be considered an automotive manufacturer. They're a car company. Very useful to compare ESG scores to different car companies. Less useful when comparing to other sectors, which I'll explain why in a minute. But really, you know, it's about your ESG score compared to your competition, not so much across sectors. So, you know, really, like I said, ESG ratings, what they don't do is that they don't look at the product being sold. An ESG rating is not going to care that they're selling electric cars, right? It's not going to be useful comparing two different sectors. So to compare Tesla to Exxon, you know, it's just not a useful comparison for us. And it's not binary. It's not one of these things where it is ESG or it isn't. I hate it when ESG gets used as a noun, that something is ESG or something is not ESG. There are so many different perspectives when it comes to ESG. Everyone's going to have their own approach and how they use it. That really it's about risk identification rather than an absolute sort of yes or no. So, you know, really that's the high level on ESG. When it comes to Tesla's ESG score, so there are a few different companies that provide these ESG ratings. I'm going to go through the top three, in my opinion. Sustainalytics, which is owned by Morningstar, we'll start there. That really, when it comes to their assessment, you can see here that Tesla gets a medium risk. Okay, so Tesla is kind of this 28.5. You want a low. This is a risk rating, so a lower score is better here, right? They're considered sort of, you know, in the middle of the pack. Mind you, this hasn't been updated since November, so, you know, take that with a bit of grain of salt. But you can see here that, you know, really Tesla ranks 41 out of 82 within the automobile sector. So compared to other car companies looking at 82 car manufacturers, Tesla is right in the middle, according to Sustainalytics. Here are some other companies. So Mercedes-Benz, you know, has a better ESG score. They've got a lower, but that's still number, you know, 17 out of 82. BYD, this is Build Your Dreams, a Chinese electric car manufacturer. You know, Tesla here in the middle, and then Toyota and Volkswagen, you know, slightly higher ESG risk scores. So, you know, it's not like Tesla is terrible from the Sustainalytics standpoint, but but they're also not very good. They're very much kind of middle of the pack. And the one thing I want to point out that they do talk about as well are these top material ESG issues. So materiality, this is like a big word. This was a big part of my thesis that I did on ESG ratings way back, probably about 2008, so about 14 years ago. I wrote that thesis, and we were looking at the financial materiality of ESG issues. This is another word for relevance. So, financial materiality is how relevant are these ESG issues to the company's bottom line. And so the most material ESG issues for Tesla, as identified by Sustainalytics, are corporate governance. So this is going to be how the government or how the corporation is governed. It's going to be human capital, which are their employees and how well they treat their employees, and things like retention and attracting the best employees. Product governance. So this is going to be things like quality and safety, right, of their cars, and business ethics, which is just kind of general ethics of the business. This is what Sustainalytics has identified as the 4 sort of most material issues. From there, we'll go on to the next company. So this is MSCI. Morgan Stanley Capital Indexes. So MSCI does do a lot of these different ESG indexes. And so, figured it would be helpful to look at how they do it. So when it comes to this, really again, Tesla has sort of this average ESG rating. AAA would be the highest score. Then from there, AA, single A, triple B, double B, single B, and then triple C would be like the nastiest companies would get that triple C rating. And you can see that, Tesla gets a single A rating. Not bad, not terrible. It would put them in the sort of top half, right? Almost sort of top third, depending where they are within this A category. So, they don't have a terrible ESG rating again. It's interesting, this sort of implied temperature rise metric that you can see here that, that they're not necessarily on the best trajectory. Now, again, these are going to be their internal corporate emissions. This isn't going to be what we call scope 3 emissions, which is the use of their product. So they don't get bonus points for the fact that they produce electric vehicles. It's really just looking at their operations. You can see they used to have a AA score, right? But then in 2019, it kind of dropped to single A, and it's been single A ever since. Unfortunately, they don't have a decarbonization target. They don't have a sort of, net zero by 2050 or 2040 or 2030 plan, right? And that, so this is going to hit them quite a bit, right? And it wouldn't be hard for Tesla to do this. It feels to me that they're sort of leaving points on the table here. This is, you can see target data as of May 20th, so much more recent here. And then what I love about MSCI on this free page is that they do tell us where Tesla is a leader, average, and laggard. And so they are considered a leader when it comes to corporate governance. This really surprises me. Tesla, they've had some huge governance issues. I know with the SEC, Securities Exchange Commission, there's a whole thing about Elon Musk being both, I think, sort of CEO or whatever he calls himself, techno king, as well as chair of the board. And he actually had to give that up. I think he is no longer chair of the board. So, they're actually considered a leader on that now. I think that's probably a big improvement since they were forced into some of those issues. As well, they are considered a leader in opportunities in clean tech. No surprise. Tesla, electric cars, solar panels, they do a lot of really cool stuff when it comes to clean tech. So they do get some points for that. But, they're only average when it comes to their corporate behavior. So this is going to be looking at things like, executive misconduct. Obviously, Elon, I think, kind of gets them into trouble when it comes to these things. As well, the product carbon footprint. So, when it comes to the carbon intensity of their product, this is the amount of energy it takes for them to make their cars. They're just kind of average there. And they are a laggard when it comes to 2 really important things: product safety and quality, that they've had several recalls, right? And that's going to hit them. It really is going to lower their ESG score when there are concerns around safety and the quality of their vehicles. I know the autopilot, there have been some issues there. As well, labor management. To me, this is probably the most important thing, that when it comes to how Tesla treats its employees, there have been some controversies here. And I think that is really, really hurting them in terms of their ESG score. The last thing I'm going to show you is S&P Global. So this is like the kind of important one here because this is the index that Tesla got kicked out of. This is the score that they use to decide whether Tesla should be included in that index or not. It's pretty interesting here. You can see, they've got the score of 28 updated in February, right? And you can see it had been quite a bit lower. And then in 2021, it actually went up. So, it's interesting to me that they were in here in the index before, but now, even though their score is a little bit higher, they did get booted out. And, I think I have an idea for why. But before we get into that, I just want to help you understand what goes into this score. So really what it comes down to is S&P really looks at their disclosures, right? And when it comes to their disclosures, this is CSA is their corporate sustainability assessment, right? So this is a survey that they send out. And it's a little bit annoying because, S&P creates their survey. They send out the survey. Tesla has to respond to the survey, which they did do. They did respond to the survey, so that's good. But, the information they provided wasn't great. You can see their disclosure rate was only 72%. And compared to their peers, their data availability is low. That they're kind of not playing the game. They're not responding. They're not disclosing about the things that S&P is asking about. You can see the maximum industry score would be 39. And that, they would have this potential score of 28. But because they haven't answered all the questions, Tesla only gets 17. So you can see here, they only get 17. Right? And it puts them pretty low. And really, if they just answered the survey, they could probably get a much higher score, about a 28, if they just answered everything. From there, these are the required public disclosures. From there, they do have this like additional disclosure. You can see here only 59% disclosure rate, but these are things that not every company is going to do. So, the data availability relative to peers is sort of medium. They could get a potential score of 36, but right now they only have a score of 16, which is pretty gosh darn low. So again, I think Tesla is sort of, they're not playing the game here. They're just not disclosing, and that's really hurting them when it comes to these issues. Some interesting more data here. They split it up between environmental, social, and governance. So on the environmental side, they're slightly below average, but it really is on the social side that Tesla has such a bad score that they are well below the industry mean when it comes to the social score. And governance, they are spot on. According to S&P, they're not a leader, they're not a laggard. They would be just sort of average when it comes to governance. Last thing I want to point out here is this kind of cool little, chart that they've got here, this image, so that really when it comes to these different issues, these are all different ESG issues. You can see that the industry best would be this solid line, right? My guess, it'd be interesting to see. I'd have to kind of dig through, but a company like BMW, probably scores pretty gosh darn high, on this. So this might be sort of like BMW or another company that, is the industry best. From there, the industry mean is the dotted line, and then Tesla is this sort of gray line when it comes to this. Right? And it's really interesting because this tells us where they're doing well and where they're doing poorly. Like I said, their governance, they've had to kind of step up their game there. So they actually have a decent governance score here in terms of that corporate governance. They also have a pretty good low carbon strategy. Again, they don't have those targets necessarily the way that MSCI wanted them, but they do have, a decent low carbon strategy, which is great. They're not terrible when it comes to occupational health and safety, a little bit above average here, but they're really lagging in a few key areas. One of them is operational eco-efficiency, that in terms of the operations, they're pretty inefficient, that they could do a lot better there. The worst ones that I'm seeing here are talent attraction and retention. The Tesla is doing a really bad job of managing their employees, of attracting top employees and then retaining those employees. And a big part of that is probably this human capital development. This would be them developing their employees and giving them opportunities to actually score a 0 in this category. Now, again, I don't know if this is because they're just not answering these questions on the survey, right? They're just not disclosing this stuff. Or whether it is really bad that they don't create those opportunities. I don't know. But hey, if they're not disclosing, if they're not answering the questions, we kind of have to assume the worst case scenario, which is why Tesla is scoring so poorly here. It really wouldn't be hard, I think, for them to be able to bring up their ESG score, but they're just not doing it. So, the last thing I'll talk about is just like the index itself and sort of, this is the news story about them getting kicked out of the index. And it's just really why that tweet is sort of so disingenuous, is that when you understand the index, like it's just really like, it's not shocking that they got kicked out. So, this is the Invesco S&P 500 ESG Index ETF. So this is an ETF based on the S&P 500 ESG Index. So, we can't buy the index as an investor, but we can buy an ETF that tracks the index. So this is, if you're in Canada and you wanted to buy this, this is the ETF that you would buy. And you can see that the investment philosophy, when it says why invest, that this ETF is designed for investors looking to integrate ESG principles into their core investment strategy, a risk return profile similar to the benchmark, right? This ETF aims to replicate the S&P 500 ESG index, which is the underlying index, which is designed to maintain a similar risk return profile as the benchmark, the S&P 500. So really what we're trying to do here, this is what I call a doing less evil ETF, where you're trying to get the same risk return profile as the S&P 500, but we're getting rid of the worst companies. And so what this means is that when we look at the sectors, that this sector breakdown is going to be pretty much spot on the same as the S&P 500, right? Which means that it is designed to replicate that, and it is going to have energy in here. Elon Musk seems really upset that it's, that energy is in here, but like, hey, this is what the ETF is designed to do. There's energy inside of the S&P 500, and so there's going to be energy inside of this one as well. That Tesla would fall under consumer discretionary, that car companies fall within this sector, right? So that's where Tesla is falling. One thing that drives me a little bit nuts about his tweet is that he's like, top 10 in the world. No, this is not a global index. This is a US index. It's interesting that there's like one international company. I'm kind of curious which, what that would be, but really this is a US companies only. When we look at the top holdings, you can see Apple, Microsoft, Amazon, Alphabet, which is actually Google, United Health Group, NVIDIA. Here is Exxon. So Exxon is not top 10 in the world. They are top 10 in terms of the US, but it's not that they have a top 10 ESG score, like they're the most sustainable company. No, it's just that they're a top 10 holding. And this is a market cap weighted ETF, just like the S&P 500. The biggest companies get the heaviest weightings. Apple and Microsoft are the biggest companies in the world, right? So they're going to have the heaviest weightings. So Exxon, it's not necessarily about their ESG score that gets them in, but because they do sneak in, because Exxon is eligible, and I'll talk about the definitions in a moment, and Exxon is the largest oil company on the S&P 500. That's why it is still inside of this ETF. To dive just a little bit, I'm going to go a little bit nerdier, and then I'm going to call it a day. But to just understand the methodology here, I think this really explains why they did get kicked out, right? Is that the way this specific index works? I'm just going to scroll down. Here we go. Give me a moment here. So these are their exclusions. So as of each rebalancing reference date, companies with the following specific business activities as determined by Sustainalytics, remember them, and or companies with disqualifying United Nations Global Compact scores as determined by this company are excluded from the eligible universe. So this ETF is going to get rid of controversial weapons, right? It's going to get rid of tobacco as well. But those are really the only negative screens. From there, they do get rid of companies with a low UN Global Compact score. So things like, child labor or human rights violations, that's the sort of UN Global Compact, they'd get out of it as well. But in terms of sectors, the only negative screens, the only thing that this index has a hard line on are controversial weapons and tobacco. So again, no surprise that Exxon is in here. Fossil fuels are not excluded. If you don't want to invest in fossil fuels, don't buy this ETF. This is not the right index for you. And then from there, it's really interesting, right? So that companies with an S&P Dow Jones Industrial ESG score that falls within the worst 25% are excluded, right? But that's not Tesla. They're not in the bottom, right? 25%. They're about average. But the way it works is that for each industry, so for each sector, so for Tesla, it's going to be consumer discretionary. Companies are selected in decreasing order based on their ESG score until 65% of the eligible universe's float adjusted market capitalization is reached. Okay? So really what this means is that they're going to go down the list on that consumer discretionary sector, and they're going to look at all the companies that are inside the S&P 500 that are consumer discretionary, and they're just going to go down the list until they hit 65% of this market cap. So if a lot of the big names get cut, right, then they're going to go further down the list. In Tesla's case, it looks like a lot of the consumer discretionary companies were above it. A lot of the big ones were up there, right, such that they just didn't get included. They just didn't make the cut, right? And so, it's not necessarily that they got excluded because Tesla is like a horrible company or they've done these terrible things. To me, it's just pretty clear that Exxon is not playing the ESG game, that they didn't answer the survey completely, right? Disclosure rate 72% here and 59% here. They just didn't play that game. And the result is that they got cut from the index. So, that's my video. Hopefully this has been a learning moment for you. I would love it. Elon, if you want to reach out, I can help you get back in this index. It would not be hard. Really, you just got to fill out that survey, man. Like, it's not that hard for you to get there. Definitely there's room for improvement in terms of your ESG score, but the answer isn't to bash ESG and call it a scam and, kind of play politics with that. The answer is straight up to improve your performance and disclose what these ESG surveys are asking for. That's really it. Anywho, I'm Tim Nash from Good Investing. Thank you so much for watching this video. If you like this video, give me a like, ring the notification bell if you want alerts when I release new videos, and please, please, please subscribe to my channel. Hope you're having a wonderful day.